Welcome to Markets Now. I'm Michelle Rook with Mark Schultz, Northstar Commodity. We did see a lower day in the livestock futures on Wednesday, mixed in the grains. And Mark, let's talk about the wheat market first, because we did actually see a rally there, most notably in HRW wheat. How much of that was technical versus weather?
I'd say the weather probably outplayed the technicals. I do like some of the technical action that's starting to take place in the Kansas City. In fact, wheat in general, starting to show at least a little bit of a glimmer of hope. I believe it's now 3 or 4 of the last 5 weeks that we started to close higher than the opening on a weekly basis. One of the key numbers to watch on that KC hard red wheat would be on a technical basis that you might start seeing some more shift out of the short positions and start seeing some buying. Would be a close above 595 on July KC wheat. Basically, I'd like to see it go over $6. Try to get you some type of a hope that there's something else changing. Weather-wise, you're going to be in a very warm, dry, maybe even a hot, dry pattern and windy pattern here in the Southern Plains, and that might be one of the things that could drive the market a little bit quicker here, and maybe for the first time in a long time, putting a little bit of premium back into that market.
Yeah, no doubt. And then we're hearing news that Russia's maybe slowing their exports because of quality issues. Is that another thing that's given the market a little push?
Well, the quality issue would only lead me to believe that whatever they have for leftover on wheat probably is not that good of quality. So that would make sense to me. The other one has been, and keep this in mind, the winter wheat crop over there, it has been much warmer than normal and drier than normal in Russia. For most of the winter going now into the spring time period. So we might be seeing some issues there where the wheat crop maybe gets a little bit smaller. Now that's kind of a big thing because Russia in the last 2 years has had these great wheat crops, and then they've had plenty of wheat, and then of course they fire sell it below everybody else. So if we could get them the wheat crop in Russia to decline, that would likely lead, hopefully, into some better demand going over into Europe, and then maybe we pick up a little bit on the bottom side of the program on the sales as well.
Would corn have been up today without the help of the wheat market?
I doubt it. If it would, I'd be maybe more steady than anything else. Corn market, I mean, like the beans and like the wheat, you've still got a significant short position in the market. But if you look at just the weather in general, I would say it's neutral to slightly bearish. You're probably going to be planting crop, at least in the Western Corn Belt here starting later this week. And I think for the most part, you're probably going to see corn acres in most cases when it gets warm like this, and dry, you're likely to see the corn acreage go up. So I would say overall, I still think 90 million acres of corn probably is too low. I think it probably comes up maybe to 91, maybe 91 and a half, someplace in that camp in here. The big thing is going to still be the South America crop. And here's the thing to watch on that. It's been drier than normal, and I think you've got some yield problems in both Paraná, Mato Grosso do Sul area in Brazil. But Mato Grosso is the biggest state that you have to keep focused on, where they produce roughly 45, maybe even close to 50% of the total corn production. They've been moving right along here with pretty good weather. We're getting to a point that either you get hot and dry real quick, shut this rain off completely, and then you would probably start to chip away at the size of the corn crop. If you don't, and it goes on for another rain for another 2 or 3 weeks or 2 weeks, and I'd say even by the last week of April, if you haven't created a hot, dry pattern by then, you're not going to do much damage to the crop up there. So I think it has to go quickly in South America to go warm and dry.
And speaking of South America, we're supposed to get Conab's Brazilian numbers out tomorrow before we get USDA numbers out. You know, is that what has weighed on this market here the last couple of days in soybeans, is fear that that crop is going to be raised by Conab, or is this just the function of the meal market pulling soybeans down?
The soybeans, what keeps the weight on the beans is the fact that the meal market is showing very little of any sign of wanting to go higher on this. Here, we're crushing beans and more beans for the bean oil, which means then we still produce more meal. So you've got to get rid of the meal. Argentine farmers are starting to harvest, and I will tell you, I'm pretty confident you're going to see the Argentine farmer or the Argentine government moving meal into the world market here in about another month. And so our business for meal likely is going to start drying up. Keep in mind, Argentina is the largest exporter of meal in the world. And the only reason why we received a lot of business this past year was the fact that they had such a poor crop last year.
No doubt. So we're going to be watching the Brazilian, the Argentina numbers in the report tomorrow. But other than that, is there anything else in the report that you're watching or that could get us out of these trading ranges that we've been in, especially in corn and beans?
Yeah, I think it still has to be the production has to decline. You're going to likely, we've been grinding a lot of corn for ethanol. So I would suspect the ethanol grind or bushels used for the grind there is likely to go up. But keep in mind, when you're dealing with a 2.1 billion bushel carryout, even if you do keep the grind at the pace we're going, you might go up 50 million, 75, give it 100 million, but that's still only going to get you to 200 million bushel or 2 billion bushel carryout. And might get you 15, 25, maybe 50 cent rally, but it's not going to do much more than that. So to me, you have to have production losses in order to move the markets to the upside. So if you can pull the corn, which is right now roughly 125 million metric tons on the Brazil crop, I think you got to go under 120 minimum to get the market a little bit more excited about what's happening as far as production.
Yeah. Cattle market had a down day. So was that profit taking? Because the funds seem to be selling on any little uptick. But we've also had another case of bovine influenza A that was reported in New Mexico, and the stock market was down. So maybe a combination?
A number of things here. One, I think beef prices got high enough that we are seeing, for starters, our export business, and we've got a strong dollar, and it's up sharply again today. But you're going to see our exports on beef leaving this country has been low, and our imports of beef coming into the U.S. has been on the high side. In fact, I think we have gone now 14 consecutive months that we have imported more beef per month than we've exported. So that it does not bode well. In the currency stock markets going down does not help us in getting more export business as well. So I think that's a problem. Maybe that demand has shifted over to pork because it certainly has seen a bigger jump for the hog market. So to me, the cattle market is still concerned. And also, not only do I think we lost demand, the other thing that's happened is that we're feeding the cattle now to record weights in here. So we're 30 pounds above a year ago. And that extra weight is equivalent to last year, is equivalent to 3.5% more beef on a weekly basis. So we might be killing 5% less cattle on a weekly basis, but production is only down 2%.
So that shift in demand that you talk about, Mark, from beef into pork is part of what pushed the hog market into contract highs in addition to fund buying. But today it looks like we put in a bearish key reversal. Is this the end of this? Is this the end of the rally?
It could be. You have to take warning because it's a market that has hit an objective that we had for quite some time, that we thought we'd get the summer months to $109. What made it a little more difficult today is you had a lot of bullish news with the cash market up $7 yesterday, the pork cutout up just over $100. Export demand has been phenomenal for the pork, much better than anybody would have guessed. South slaughter still running above a year ago. Everything would point that things are getting a little bit, still has more optimism. And technically, had you closed above 109 today, it would have been suggested we'd go to $115. But what we did is we opened up $1 higher. We closed $3 lower. We posted a daily key reversal lower on the hogs. And one has to heed that warning in here because that is quite the move to the upside. And it is extremely profitable. Even with the market down today, it is still very good levels on the hog market for the hog producers. And they will need it. They cannot afford to let this one get away.
Yeah. So hedge here because, as you always say, the market's top when the news is the best. Is that right?
That is correct, Ewan, and they'll bottom when the news is the most bearish. So right now, it has had a big move, and a lot of people on the bull side are really thinking it's going to go higher. As I warned yesterday, as you go on up, you're likely to lose demand, not gain new demand. So that is the tough one in there. So one just has to be a little bit careful about that market.
Are you worried about inflation with the CPI data that was out today and what it could mean for the commodities?
Well, what it's done so far with the CPI coming in, suggesting we're still running pretty hot here, and it would tell me we're not going to see a cut in interest rates anytime soon. And keep in mind, the USDA or the Fed 2 weeks ago, 3 weeks ago, said we're going to have 3 rate cuts. When, we don't know, but we're going to get 3 rate cuts before the year is over with. That put the stock market up about 1,300 points to the upside. So futures wise, we went just over 40,000 on the Dow. It's quite a move in a short period of time here. And as it turned out, as I was telling people, you already told what you're going to have happen. So even if they do have an interest rate cut, it's not going to get you anything bullish on the market. It's already factored in. We posted a daily key and a weekly key reversal lower on the Dow futures last week. That also should heed a little bit of warning here for the short term on the stock market. Currency still staying strong. Things looking just a little bit more tougher here to make things work out. And that's why I still think for grains, you go up, but you're going to have a weather problem.
All right. Thanks so much for joining us. Mark Schultz with Northstar Commodity. That is Markets Now.